Welcome back to the Krown Crypto channel. Today, I'm joined by an extremely special guest, someone that I have high respect for, Mr. Chris Laurie here. And I'll just hand it off to him. He can do his own introduction.
Thanks for having me. It's great to be here, and I want to commend you on the fantastic resource that you provide to the marketplace. So, my name is Chris Laurie. I've been trading more than 20 years now. I competed in 4 Olympic Games, and then I retired when I was 35-ish. But in the interim, I had been studying the financial markets. After my first Olympic Games, I took the Canadian securities course thinking I wanted to go down that path, and I maintained a high level of interest in the financial markets. And then when I retired, which was 98, a lot of you were not born yet. That was like when the NASDAQ bubble was really starting to pump, and I ended up being a bit of a bag holder on some of those positions, I'm sure. But then we saw a nice correction where you were able to start to take on some other more solid, realistic positions, and kind of went from there. But I moved into FX in, like, say, 99, and then got really a lot more intently in FX. And in 2000, then in 2005, I went to Singapore for a speaking event, and then I met up with someone who became a client. That client introduced me to the institutional banking and FX environment in the institutional banks. And so from there, I just said, this is the place to be. Ended up moving my book to Singapore in 2011, basically. And it's just been a phenomenal, wonderful. Couldn't have designed it better myself. It's just been just been amazing for beautiful. How everything has worked out. So.
Absolutely beautiful. So I wanted to start this off with something completely off the wall here, because I was doing some research into it before we got started here. Obviously, I've already seen many of your videos. I know a lot of your philosophy with price action and everything that goes alongside that. But something that I thought that was so interesting and unique is that you have some experience with, philanthropical work in Southeast Asia. Is that right?
Yes, that's right.
To me, this is so interesting because, what's one of the big things that people typically say is kind of like a pushback on trading as a profession. They say, you're not creating value for anyone. Well, here's someone, a professional trader, who's used his finances from his profession to go out there and help other people in an extremely direct and like amazing way. I thought that was just so damn cool, man. And it actually inspired me. And so now I'm talking with one of my friends who's over in Africa about building schools down there. So wow. I want to say thank you for that, because that's incredible. And it just really pulled a lot of things through to me. So, on that topic, I wanted to get into some of your thoughts on essentially the psychological game of trading. I think most people, and I'm sure that, and you with your own group, you probably know this as well. You probably experienced something relatively similar to this, in the sense that most people can, come up with a trading plan or learn at least a basic strategy within a few weeks, maybe a month, maybe 2 months, whatever it might be. But typically something gets in their way, right? And it's their own mind for a lot of the times. And, I wanted to speak with you about that. And how do you handle these sort of unique situations where you can be your own worst enemy?
So just going to go back to something you said earlier. Admittedly, when I reflect back on my sport career, it's really one of the most selfish things you can do. It really, I couldn't see it any other way.
You mean as a sport?
As when you're pursuing sport, it's just, you're just so selfish.
Even though you're doing it for your country.
Yeah. Okay. Now that's something where, because you do get community support and country support, and you do know, and you do feel, and you do want to succeed, because you do feel that people come together through your success. And so that is definitely rewarding, but it's still at the center of it is still you, and that's something that when you look at someone who's very giving, someone who is just a servant nature, they're really coming from a completely different mindset. And so it wasn't until I left sport and started to reflect on things. And one of the reasons I really heavily pursued trading was because I got so burnt out from leadership and people disappointing me and things,
Right.
not going your way for matters beyond your control. Because I always wanted to be the worst guy on my team, the laziest guy on my team. Because if everybody's as lazy as I am, then we should do well. So when I got into trading, then here I am finding myself in the same type of domain, and always in my mind, I'm thinking that yes, I have a heart for charity, and particularly I think it's extremely important for people on many levels to expose themselves to how other people live.
Right.
And it's really quite critical. And actually, don't just go and watch it on a cheap holiday or beach holiday at some impoverished
Go and
place.
live it.
Go live it. You got to live it. So because that's going to really develop your brain in so many ways, and as it pertains to the market. So
well, I think you just brought up a great thing right there, in the sense that when you go to a foreign place, one of these places that is probably not as well off as where I think we kind of come from, you get a greater perspective of things. And then also when you go immerse yourself in an environment like that, truly immerse yourself, not, as you said, like a beach holiday, which is fun as well. You should probably do that too if you can. But when you immerse yourself in that, it'll give you perspective in yourself that you are unchanging in that way. And that can be a very, very powerful mentality, because understanding that is kind of the key, at least in my opinion, to understanding your own emotions when it comes to trading. It's the same thing, basically. You are just, as a person, regardless of your emotional state, whether you're in a great environment or a terrible environment, by your own definition. And if you can work off of that and just focus down on what actually matters, that is the deductive process that allows you to be in tune, at least in my opinion, in tune with what's going to give you the best access to your own facilities that will allow you to just follow your own process, regardless of how you're feeling, all of that good stuff.
And that's the point that we want to, that we ultimately want to get to from a psychological perspective. So we're all in a position. So when you start trading, we're all in a position of, what has our history and what has our environment to this point developed in us, and what is our mental framework, what is our reference points. Right. And I think what happens to a lot of people is that their environment tends to pull them away from their own uniqueness, their ability to be confident in.
Do you mean in the sense of like being caught up in routines?
Uniqueness in the sense that every individual has like a unique gift. You've got something that somebody else would really appreciate about you, right? And you've got a skill set that you take for granted, and that you might not even think it's a valuable skill set.
You might not even realize it too.
Right. That's right. A lot of them don't. And I think you're in your best place when you both have a skill set, recognize a skill set, and are in an environment where you utilize the skill set, right? So when it comes to trading, I think that because we're so trained to adapt to our environment and compromise our skill sets, compromise our strengths and our uniqueness, that we just become accustomed to that and desensitized to really consciously processing what we're good at and applying it, right?
Gotcha.
So when it comes to trading, what a lot of traders will do is they'll be like, wow, it's a massive marketplace. Where do I start? What do I do? And so people will go through what I refer to as the development process, right. And they'll just go exploring. The exploratory process. They just go explore.
And this is the point where you're just like going and trying out a billion different strategies.
Yeah, and that's
all the indicators.
And that's healthy, right? That's that's something that everybody has to do, because they need to explore the marketplace so they can see what they connect with, and you are definitely going to go down roads that you shouldn't go down, but you have to go down that road to understand what's there.
Can I actually stop you for just 1 second and ask a question, just to see if you've kind of experienced the same thing? I feel like it's an unfortunate reality that we almost have to make mistakes within that phase and almost get burned in kind of a serious way, because it seems like, at least from what I've noticed with myself and also others, is that we learn best from our own kind of emotional scarring. Do you kind of see the same thing, or do you agree?
Yeah. So those mistakes are important. Now,
Mm-hmm.
and I think at the early stages of the exploratory phase,
Mm-hmm.
you're going to make mistakes that are random. So
Mm-hmm.
on a broader level, they're going to have impact, but on a micro level, in terms of really refining where you want to be as a trader, it's not really going to tap into that. You don't really,
Okay.
you don't really tap into really refining, because the goal is, not to try to copy what somebody else is doing, because the
Right.
roadblocks are, they think they're a completely different persona than you, completely different emotional makeup than you.
Right. So different preferences.
You are unique. So the goal is to take your unique brain, your skills, manage your weaknesses, and through a specifically designed process, it's going to marry your uniqueness to that of market, call it market structure, or some people gravitate, they're mathematically oriented, they gravitate toward algos.
Right.
Some are indicators, some are price action, some are fundamentals, some are when the moon and the stars align. It doesn't
Right,
matter.
right, yeah.
It doesn't matter, as long as you can optimize the uniqueness of how you think, and you're able to see the consistencies and the patterns and the behaviors in relation to how you uniquely think. And so, but you've got to design a process. So we talked about the exploratory phase, where you do have to randomly go out there and say, what's out there? And of course, learn about the market.
Mm.
And at the end of the day, as you start to refine this process and say, okay, hey, I gravitate toward X. Now let's start getting down to the nitty gritty. We're going to build a structure around identifying very specific aspects of what drives price, how price moves in relation to some of the reference points that I'm using. And now you got to take this to the test. And when you take that to the test, then you're going to start to see, smaller, more immaterial mistakes, idiosyncrasies about the market. The reason why we have to go through this process, and it's something that you cannot avoid. You can't skirt around it, and because we all have the big trade that worked that made us think we're smart. Okay, and
it's the worst thing that can happen to you at one beginning is having success.
For sure, it happens. It should happen to almost everybody. Should have that thing that makes them feel smart. You see it in business. You see it everywhere. You see it. Right. Somebody's in the right place, the right time, whatever. They made a lot of money. Now they think they have a business opinion and in an area that they don't know anything about. So you've got, so the idea is to build a structured process to really blend your unique mindset to the market. And then there are other, of course, psychological parameters that you put in there as well. And we can get into some specifics as to things that you should very much be mindful of, or exercise, or apply as you're building out your framework. But before I say that, let me just say this one thing. So if the market is, if you look at the desk in front of you, and if that represents everything there is to know about the market, when you're trading, you only need to find your niche to go into the market and take money out, because that's the goal, right?
Yes.
So you need to know that niche. You know that niche better than anybody else. Nobody needs to validate it. Mm-hmm. You don't need to get on chat with your friends and ask them what they think. If you have gone through the process and have identified this niche, then that's yours and uniquely yours, because you've gone through the process of marrying your brain to a specific dynamic in the market.
Would you go as far as saying that it's almost like a requirement or rite of passage in order to have a period of isolation where you remove all external influences and just focus down on what you're going to do? Because I feel like I had to do that when I first started.
Yes.
Right. Okay.
So like, I think, community facilities are very common, especially these days, increasingly so. I've never been a fan of chat rooms, not because they can't be productive, because I think for some people at a certain phase in their trading, they can be, and they can be a good information resource facility.
Right.
But if you are in a chat room and when you're at that stage where you're really trying to identify who I am as an independent thinker and what process am I going to use to find my niche in the market, a chat room can very much throw you off track because as you're going through your process, they start giving you their ideas, but they're not you. And I'll say that I worked with a client in Singapore, and we were working through about 3 different FX desks at the banks there, and we would get on the phone and have these conversations, and because the dealers, because they understood what kind of traders we were, they would ask us what we thought, and then we would ask them about the structures and what things, something they have related to a position we'd be interested in, what structures were available, and they would give us their kind of their point of view, and my client would just want to do the complete opposite, the absolute opposite, and she was a winner. She was one of the, she's one of the most remarkable traders, investors I've ever seen, but she's always doing the opposite of what other people do, you know? So.
Well, there's certainly something to that, because I mean, it just goes off exactly what you said. You have to know exactly your little niche of the market. You don't need to know everything about it. And I feel like when I do videos on YouTube, for example, and I'm analyzing the market, I'm looking at a bunch of different things, but I always want to be as abundantly clear as possible for anyone who's watching. When I'm trading, my strategy is it's very simple. It doesn't have to do with basically any of that, just real fucking simple. It needs to be very tangible. What's an exit? What's an entry? What's my profit taking? All of that good stuff is very cut and dry. You don't need to know every last little thing about the market right now. It's more noise than anything else.
That's right.
Exactly. So go ahead, please.
So if I can get a little bit more specific, because I think to now people are saying you're speaking very much in generalities, right? Okay. So like I'm a price action trader, but being a price action trader, of course, we do have competencies in how the broader markets work, the flows, what impacts what, and the undercurrent of the market. That is, of course, is all a part of it. Right. But when it comes down to taking positions, I'm very, very specific. So I use the fractal nature of the market, which there's many interpretations of fractals. So the interpretation that I use is fractal geometry, which quite simply is a price behavior that you'll see play out on a 5-minute chart. You can see the exact same price behavior playing out on a 60-minute daily chart. Right. And I'm trading them more or less the same, but with a different tempo.
And that's, okay? I just need to stop you for a second, because that's a very profound point, because the problem in especially a channel like this, which is focused mostly on Bitcoin and cryptos, the way that most people think of fractals is not in what you're saying right now. So I just want to make a distinction here, because the reason I used to have such a thing against fractals, because what I always saw was on Twitter and YouTube and all that good stuff is people would essentially just pick out a portion of price action that they liked from the past, and then would just copy paste it onto the current price action as to what they wanted to do. And it's like, whoa, that does not work. And I think a lot of people found it the hard way in 2018. That's completely different to what you're saying. And I just wanted to make that distinction for the people.
So what we do to the process that I went through was we did a lot of studies on the algorithms and the way liquidity is provided to the market, how it's delivered to what you see on your desktop. And from there, we started to study price behaviors, but we started to study them not only independently, but also within relationship to one another. And so to do that, we would engage, and we would engage with live money. So the reason why, and it would be an inconsequential amount, but we would engage in a structured process with live money, studying very, very specific dynamics of price behavior, so that we could internalize. So we're now marrying our unique emotional disposition and our brain and applying it to the market. So
you're essentially conditioning yourself.
We're conditioning ourselves,
right? Okay.
Because you want to have negative outcomes, positive outcomes, and then indistinguishable or undetermined outcomes, right? So that scale is going to constantly move based on whatever it is that you're studying. So when someone says, they have a good gut feel for the market, that's because they have lived that experience, and a similarity or some representation of that experience so many countless times that it lives within them. So when you are studying your tools, whatever tools you use, it's, you want to be going through this structured process so that you have parameters and so that it's not random. So you have outcome data, outcome experience, outcome internalization of what price behavior can do. And then over a large sample size, you're going to start to think, okay, X number of negative experiences, I just don't like when it does that. So okay, here I see something that is supportive. Therefore, I take X action based on the current price behavior. So over time, you've got a large sample size, and you start to build some framework, and then you start taking some of these behaviors live into the market, taking larger position size and building a framework around, call it a trade, with an asset, a specific crypto or a specific FX cross, and because what you're doing in the process really is you're customizing your brain to get married to this type of approach. So one of the approaches that I use, for example, and it's very simple, is if I know my level where I'm looking for a price response, because when price is moving in like a consolidative period, regardless of time frame, as soon as it moves out, the moment it moves out, it actually moves into a whole new state of liquidity. So the price behavior actually physically changes. The spreads change, the way they expand and contract changes, and the price movement changes. And so when you move into that new state of liquidity, we want to see what happens next. And what I will do is if price moves in a certain way and starts leaving, gaps and little voids and little spots void of liquidity, then you're probably going to see price retrace back into the area. So when I'm taking an entry, I've studied it, countless tens of thousands of times and applied it. I'm taking an entry in that type of price behavior because as soon as I enter, I at least should put myself into some level of control over how I'm going to manage that position. And so what I like to do is you can quite intensively study whatever your tool is, take it down to a smaller time frame and study it intensely so that you can adapt it out on the higher time frames. Does that make sense?
Yeah, 100%. And just to kind of summarize this whole process, it essentially boils down to you as a trader being comfortable with being your own authority, your own boss in this whole sense. And that is such a profound thing about, I guess, today's society is that, that is really, I think that's really what separates, people who end up doing this for a living and people who do not, is they're comfortable with that aspect. They're comfortable with, hey, I can't be reliant on someone else in order to tell me the answer. Just like you were saying before, being in these chat rooms and whatnot, of which I have my own Discord. But, unless if you're truly already validated and kind of building your own trading, it's only going to be noise and it's probably going to hurt you more than help you.
It very much can. I think chat rooms are great for resource, but you don't want it to interfere with your independent thinking, because the day that your trading goes through the moon is the day that you've more or less shed as inconsequential other people's opinions and the way other people do things. So you have to separate how somebody else does something. So somebody might draw your attention to something that you may want to study, but you don't want to copy what they did. So once you become an independent thinker, your trading goes through the roof. The changes in your outcomes will be quite material.
Essentially, you should be looking at other people like yourself or like anyone who's validated as a colleague in a sense, not as...
I consider myself to be a tool through which people pass to take them to adjust their perspective and give them a bit of a more in-depth knowledge of how to do something, and we give them a lot of information. And so the idea is to if you come to us, you pass through us, and then you go on to really defining your own uniqueness and independent space. Now, a lot of people stick around because they love the environment and whatever. And some people might come in and say, this is really not for me. But I never get people saying that they didn't find value, but it's not for everybody. I mean, everybody's different, and we don't want to take that away from you either. So another thing, one thing I wanted to talk about was around risk, some important factors around risk. And I think these are things that I think people just want to be mindful of. So, we all have our personal history, and we view the market and we take a lot of that history to the market with us.
When you say personal history, you mean in the context of your own life or within just trading?
Growing up, who influenced you.
So everything.
There are countless books written on the impact of your environment on who you are and how you behave and the decisions you make and the paths that you take. Right. So, and everybody's different, but I think that everybody's gone through a process where there's value there to be extracted. So in my case, I was very fortunate, and I grew up. I had two parents. There's 8 kids in our family. I was right in the middle. I came 18 months after twins. So from 18 months years old, I was
wow, that's amazing.
So we were taught to pay for our own stuff, to work. We were never given allowance. When we played hockey, we were always the kid walking in with only one stick, because my dad said, I'm going to buy you 1 stick per season. And if you break it, you got to pay whatever, 50% of the next
school hard knocks.
So we were taught to value money. And that doesn't mean that just because I grew up in the same environment as a sibling, that they're going to go out and have the same thought process. Right. But the environment that you surround yourself in, so if you've taken trading as an interest, the environment that you surround yourself now needs to be fully accommodating to optimizing who you are, and the risks. So when we manage risks, our environment is very critical, because you take your uniqueness. You wake up, maybe it's a good day, maybe it's a bad day, maybe you've got relationship issues, job, financial pressures, whatever that might be. And what happens emotionally, and when you reflect on your life and your experiences, you will find that some of these things can move on a very, very discrete emotional continuum, and they will sneak up on you, and then toxins will build up in your system. And although trading is a separate venture, these other things can impact the mindset that you bring to trading. So you have to figure out ways, and I always say that what a lot of developing traders don't understand is that you are your own greatest tool. You are your own greatest secret weapon, because people will say that trader is not telling us everything. He's not telling us everything about his position or how he managed it or their success, because their success cannot be explained, because their success comes from the uniqueness that they've been able to control emotionally in the environment of trading. So, when you consider that, we all have to, I really didn't read many trading books. I was asked by Wiley many years ago to write a book on FX. I'm like, well, it's going to be here today, gone tomorrow. I said, well, maybe I'll write a book on psychology. And I'm like, wow, man, that's just way too time consuming. And so they gave me a bunch of books to read. And I'm like, I just don't have any interest in reading these books. But there's one I flipped through, and is interviews with traders. And there was one consistent theme with these interviews with traders. Every one of them had a risk, like a risk management system, in that if I take X number of losses in a row, the platform cuts me off. Of course, you can always turn it back on, but the platform cuts me off, or I get up and I do X. So you've got a strategy for, if I take X percentage drawdown, if I take X losses in a row, if I'm not feeling the way I think I should be feeling on a day of trading, then I do X. It might be go for a walk, hang out with the dog. It might be 3 hours off. It might be 3 days.
So just to be clear on terms here, you mean when you're in like a kind of like a downward spiral, like with trading specifically?
Yes.
Correct?
So
Okay.
yes. So if your outcome is not working, normally what people will do is if their outcomes are moving negatively, of course, in trading, you have to train yourself to do the opposite of what you naturally feel compelled to do. Gotcha. Right. So this is why we try to do the large sample size of experiences in whatever your trading framework is, and you want to engage and you want to value the negative experiences so that you can figure out ways to manage them. So as it comes to trading, if let's say you are at the trade, and again, I'm trying to articulate it in a way that some people here are short-term traders, some are holders. Generally, everyone trades differently. So I'm trying to communicate it in a way that applies to everyone, or adapt what I'm saying to what it is that they do. But you have to have a loss limit, call it, is what it's called, a loss limit strategy. So whether it's number of trades you've lost, percentage drawdown, you have to have a strategy to step back and then a strategy to come back into the market. Right. And what, because what a lot of people will do is they'll do the opposite of what they should do. So this gets down to what is the framework of your equity management? Because
just out of curiosity, have you read the book Spiral Dynamics?
No.
This is like right on par with everything there. But yeah, go ahead. Sorry, I don't mean to cut you off.
I should read it. I mean, I love the psychology of it, so
that's the interesting thing is like, I've never really found too much value in reading trading books. I read one when I first started on options and it was interesting, but I always got way more from just doing it myself. And then also at that time, I actually had a mentor. So he was very integral in kind of getting me started. Yeah. I mean, you kind of have to get your feet burned a little bit.
What I found is that when I kind of was toying with the idea of writing this book on psychology, I'm thinking there's no possible way I can communicate the depths of what is going on in this brain. I don't know that it would do people justice. And you can introduce them to things, but to get into the real nitty gritty would be very difficult articulating, in a book, and the book would be encyclopedia.
Well, I figure there is a lot of PhDs who are writing psychological books on that. And that's actually what I do spend my time reading whenever, because this question comes up a lot. And I'm sure someone's going to ask in the comments, what books would you recommend? I think you kind of just gave it away right there. But for myself, man, I've always found a lot of value, not in reading trading books, but in reading psychological books to understand my own inner workings. Because if you can understand how to manage that, which is pretty much the same way across, most people, I mean, we're mostly the same to each other.
Yes.
If you can start to understand how to identify these sort of, just psychological states that we get into, you can also understand how to work your way out of them. And that kind of brings me to the next thing that I really wanted to ask you. And I know that it's going to be specific to you, but I'm sure that someone else could get value from this as well. Mm-hmm. What sort of daily routines do you specifically have to kind of put yourself in the right mind state for, the day to come for trading?
The depends on what time zone I'm in, right?
Oh, okay. All right. I can consider that
because everybody has a different rhythm. So if you're trading FX, when FX and even now crypto, when they start,
you mean for the opens and closes.
Yeah, it's great, 24/7, this and that, but it depends on how you trade and what your rhythm is. For me, of course, I'd say probably most of you listening, we want to be watching charts all day long because we're just fascinated by it and all the other information coming in. But as far as trading intensely, so I have basically 3 models. I've got short term, and then I've got longer hold times. Let's say 72 hours to a week, or maybe even 2 weeks. Then I've got positions I hold 2, 3, 6 months, 2 years, right? But so the intraday are usually in and out in a 24-hour period. And when I'm really feeling good, then I'm quite active intraday. So my routine is, when I'm in Singapore, I would get started around 2, unless there was a gap being formed in Asia, like a move be formed in Asia, then that usually fills in during,
you mean 2 p.m.
2 p.m. 2 p.m.
Yeah, 2 p.m.
Singapore time roughly. But the challenge that I found in Singapore as I've gotten older is the later hours. When New York was really pushing, the later hours can be a struggle. And but in North America, when I'm on Eastern time, then I'm up at 5, and I'm not trading London. It's just 2. It doesn't work for me when I'm in this time zone. So I'm up at 5, and I'm getting ready, and because I want to see what's setting up on the S&P, gold, and an FX. Because sometimes if FX is just quiet, then I love to trade gold, and sometimes gold is quiet, like it is now, and I'm better off in the S&P or in an FX, right? So, and then of course I'm always these days, crypto is actually consuming even more of my time, but that's gotcha. Kind of my trading. So because you're in front of the charts all the time, you've always got your levels up. You're always, when you can get a price alert. I mean, you can look at the chart, but if you get a price alert, you pretty much know what the price has done to achieve that alert, because you observed what price did. So you still remain. I'm always connected to what the market is doing. But
go ahead.
So my routine is I go hard from, like, let's say, so 5 a.m. I ease into it, then see what the market's doing. Then I'm going hard till about noon Eastern Standard Time, which is where I have been since COVID.
Gotcha. Do you do any physical activity or anything like that?
I've always been pretty hardcore with physical activity. It's part of my life. And, I've been doing a little bit of everything, but these days I'm 59 now. I feel amazing.
Oh, wow.
I just when I thought I was retiring, crypto comes along.
It's got you, man. I know it sucks you in.
It's too amazing to sit and be passive about it. It's just it's too fascinating, and there's just way too much there. It's just really quite incredible.
On that topic, just out of curiosity, and this is like, this isn't a loaded question, by the way, but do you believe in the sort of narrative or mission of, maybe not a mission, but the narrative of Bitcoin and crypto as a whole, I guess?
My view is that blockchain is here to stay. Is that what you mean?
Yeah, I guess, okay, so I should probably explain then. So the narrative, I suppose right now, is that Bitcoin is like the asset kind of replacing gold. And obviously I think it's kind of obvious it's here to stay, right? With all the laws and all the infrastructure being built up around it, getting listed on CME and ETFs and all that good stuff. They're not wasting their time with that. I don't believe. I don't think it's going to become like the one world currency. I think that's a little bit far-fetched, but being an asset seems rather reasonable, in the same way that, you have real estate, for example. That seems kind of the way to go to me. And, then you get into the whole conversation of an inflation hedge. I guess that's kind of the more immediate narrative right now. Is that something that you kind of subscribe to, or?
So as far as let's start out with the blockchain technology. I think it's amazing. And, like when retail FX first went online, there was all kinds of adjustments. Of course, the regulators all jump in saying, don't do anything until we say you can, right?
Right.
So, and so I think that this is going to be like that on steroids. So you're going to get all kinds of, scare come into the market, and, a lot of question being called into certain coins and different blockchains and how it is, released to the market, all that stuff. So, but the blockchain technology, once it kind of gets through all those growing pains, because right now the risk is in the growing pains. So whatever positions you take, they are subject to the risks of, the government telling us what we can and can't do and how we can do it, right? So that's just a natural part of the process. And then you've got where do we stand in terms of its value in relation to my personal wealth, right? And how risky is it that it can be acquired and taken away? Now, obviously, we're in a situation now. If you look at like a 30-year bond yield dating back to 1980, every single first world economy has gone from extremely high interest rates, call it 20%. Just pull up the chart, and the yields have done nothing but fall to zero. Okay. So without getting all the details, consider what has gone on economically in terms of the expansion of money supply through that whole process with lower interest rates. Now we're at zero. So now we're at zero. Now debt has been building up even more massively. The debt bubble argument has been going on for decades, really. Right. Because when my dad used to hand me periodicals when I was a teen about this stuff, it's like, man, the debt bubble's got to burst soon. Well, that was in the 70s and 80s. So now the banks, central banks, the governments are in a position where we're like, we got no more taps to turn on. So they're going to have somehow figure out how to get creative with blockchain. And they're going to say, let's try to keep everything manageable until we decide how we're going to position ourselves, and then slowly start to free up the space according to how we've positioned ourselves to really maintain some level of control. To me, that's a view that I think is a very realistic view in the macro sense, right? And I'm not sure what you're seeing, or I'd be interested in knowing your view on that as well.
I mean, so I definitely think that Bitcoin and crypto in general is here to stay. Now, 90 to 95% of the things that are currently traded right now, they're worthless. They're going to be garbage. They're going to be completely irrelevant in, maybe a few years, probably.
Yes.
But for the ones that stay, it's probably going to be a big deal. And, Bitcoin makes sense to me. It makes sense as a replacement for kind of the current idea of gold, right? It's good to have a store of value. Obviously, people are a lot more aware of that now with the whole inflation narrative going on, and with people just noticing that prices are rising. I mean, that obviously is going to start to hit. But is it gonna like take over the world, and we're going to see just Bitcoin as the one world currency? I think that's incredibly unrealistic. I think, as with anything, you're going to take the good things about this new emerging technology, and hopefully the good things about our current system, and then merge them together. And then the change happens slowly over time.
Yes.
That's the way that you want it to go, because, yes. I always push back when someone says like, I want Bitcoin to take over the world. It's like, no, you don't actually, because what would that look like? That would mean that the dollar collapses. And if the dollar collapses, there's going to be some serious, turmoil in your life, in everyone's life. It's going to really suck for a while, probably.
Especially a lot of third world countries still do.
Oh yeah.
The underground economy, they're just doing US dollar cash.
Yeah, exactly. So, it's like, you think you want that, but you don't want that. And I think I'm more in line with like what Michael Saylor says, if you're familiar with him, and kind of where this whole thing goes. Like, you're going to have some one world fiat currency, whether it's the dollar, the yuan, or probably not the euro, but maybe, I guess it's possible. And then you'll have, your assets that essentially, support that. And that's probably the way to go. At least hopefully. I really just don't want to see like a massive war or like society collapse, because you don't want to be the one person surviving during all that. It's not going to be pretty.
Yeah. I think, like in these scenarios, it's best to understand what is taking place around you, but you have to be, and I think now more than when I look back on the tech bubble, you just don't want to get married to a viewpoint, because there's so many, there are more things, more possibilities now than there was, let's say, during the tech bubble in the late 90s, in terms of the direction the world could take and how it affects you personally. I mean, if you really want to protect your own personal wealth and your own personal domain, don't have too strong an opinion on one thing over the other. Just observe things as they play out, and then so that you have the ability to act accordingly, And, somebody said to me the other day, and it was a quote from somebody else, that be careful what you want, because when you get what you want, it may not be what you think it is.
Right. You don't know what that all entails. Right. But Chris, could I ask you a personal question, actually? Sure. Where does your motivation come from in this whole game of trading? because I imagine now, like, you probably don't have too many financial worries, I'd guess. And so, like, you obviously enjoy doing it. Where does the motivation come from?
Well, I actually, so the volatility in FX has dropped off a fair bit, since the early 2000s, and a lot of that has changed, and it started to get, quite quiet. And I was actually, for the last 5 years, I've been saying, okay, I'm just going to go digitally invisible,
Okay. All right. Off the grid.
And off grid. And then started, doing things that were call it retirement mode. But when it comes to trading, you're always connected. And this is right around when COVID started to hit. What happened was I started, looking more closely at blockchain and crypto, and I'm like, oh wow, man, like I'm quite behind in what's happening here, and I still consider I try to stay in my lane, but I still consider myself well behind. But it's actually what I needed,
Interesting.
because I really
you feel
was
like it revitalized you.
I totally revitalized me.
Wow.
100% revitalized me. And I am so fascinated. And I think a lot of people have this syndrome is, it's kid in a candy store syndrome to some extent, but in terms of it's like, where do I focus? So I'm, just try to stay in my lane and execute accordingly and slowly build out my competencies in crypto. So that's kind of what has happened there. And then, I've kept my community going, and again, I just kind of go year by year, and every year I think, okay, this is probably my last year, but it's for COVID, because in trading, it's a very isolating business, and I'm a bit of a reserved guy anyway, and I'm the guy that comes into a lecture hall, sits in the back row. I'll stand on the outside perimeter of the room if I'm going to.
You don't want any attention.
I'll stand on the outside of the room until I sort of see what's going on. Then I'll start going in, and once I've got the lay of the land, then I start going in and interacting. So I start quiet, and then I'll slowly, engage.
It must be a bizarre experience for you then, being in the Olympic Games and everything and representing your country. I mean, how did you deal with that? That would seem like it's quite obtuse to your personality.
I was the leader of the national team for many years, and then you become kind of a leader on the World Cup circuit, because you're around and you're always near the top, and so you do get attention, but you can still preserve your independence. But when you do get invited to a lot of functions, and it's the same thing, where the nice thing about being a bobsledder was I would get invited to a lot of these functions with Hollywood people and like professional athletes, right? So I would walk into a room, and there's all of these guys being paid millions of dollars, and I was getting $1,000 a month from the government. Right. And that was quite an accomplishment, because you get $1,000 if you're top 6 in the world, but you get 400 if you're top 12.
Oh my God.
Anyway, so it was quite easy to stay on the perimeter, and then slowly, because everybody else in the room wanted to talk to the hockey players and the Hollywoods.
So you felt like you always kind of scooted on by.
And so one time, in my hometown, I mean, everybody knew who I was and all that, but and you get some really unusual situations. And I remember one time I'm in this restaurant, and a little kid comes up and asks me for my autograph, and I'm like, kind of like, I'm giddy inside, because I'm like, why is this?
Oh, you noticed.
But
that's awesome.
But anyway, that's and in my family they call me the quiet one, because you just can't compete at the dinner table. There's just too much going on there. You can't compete. So I just sit back and shut up.
Man, that is so interesting. That is so bizarre to hear. Like, you wouldn't expect that. But just out of curiosity, do you get recognized nowadays, just around town and everything?
Once in a while, from the older generation.
Right.
Sometimes it's by name. Right.
Well, honestly, man, I think you'd get more recognized. Well, I wouldn't say more recognized, but I think that you'd certainly get recognized from, your contributions to just the whole trading game. Like, you're very well loved in our community.
Oh, thank you.
Humongous inspiration to many, actually. It's really amazing, actually.
Thank you. I don't know what to say.
Oh, it's all good, man. People are absolutely elated that you accepted this interview as well, man. So just a massive thank you for that. But just on that topic, publicity and everything, kind of tangential here, but do you pay attention to the news in trading? And when I say news, I want to make a differentiation here between like news and like economic events, like the Fed having some sort of a meeting or FOMC, stuff like that. Is that something that you consider, or do you just block everything out?
No, definitely. You definitely have to have a feel for the undercurrent of the market, especially a Fed statement that's divergent to market expectations, right? So I am definitely watching mostly what the Fed is moving and how the market is pricing in what the Fed can do next, and that against what actually the Fed actually does. So I'm definitely watching central banks. I'm definitely watching the data releases, payroll, CPI. Yesterday. So like take yesterday for example. So we had CPI. We had a little bit of those initial spikes are just a function of available liquidity. So you don't take too much from it. But when you get that initial spike and then price starts trading back down below its pre-release price, then you're probably going to see a bit of a reversal going on. So these undercurrents play out consistently over time. So I'm definitely watching the fundamentals as far as crypto goes, trying to keep up with the fundamentals on all of the different. I'm trading a few core assets, and then I've got some scattered around among some smaller.
So you like the shit coins?
But yeah, they're like, let's say, smelly coins.
All right, just the somewhat questionable ones.
Maybe not completely shit, but
right. Gotcha.
I've got some core positions, and again, the rhythms that the crypto assets trade are really quite amazing. So I'm able to cross apply my tools, but to keep up with some of the stuff going on and understand it technically in terms of the risks, that's a bit tough. But it's not unlike the NASDAQ bubble. It's the same but different. It's just the same, but on a whole different space. So like in the NASDAQ bubble, you'd have these assets trading at $50 and they didn't even have paint on the wall. All they have was a website telling you how good they were going to be. And all they were doing was taking investment capital, putting it in their pocket and giving themselves big salaries. And then when people found out there was nothing there, it dropped to zero. So you don't really know what's going on behind the scenes. We're in a more open, communicative marketplace now. So you know a little bit more about what's going on, but you don't really know. And those risks can sting you, in a heart.
Absolutely. That was the whole name of the game in 2017. But it was way worse than it is now in 2007. I don't know if you were in crypto in 2017.
Well, I was definitely,
okay.
With my group, I was definitely tracking Bitcoin.
Okay. Well, yeah. Bitcoin was, it was like we were just starting to understand that Bitcoin is probably legitimate around that time, and maybe Ethereum. But it's just like so many just 2017 ICOs that had a white paper. It was exactly what you're saying with the .com bubble. It's like you got a white paper and then billions of dollars of valuation. It's like, what the fuck? What is this? So
yeah.
Man.
So you can see we're slowly building into place with parachain auctions and things like that, where it's getting a little bit more substantive, right?
Do you have an opinion on DeFi?
I like it, but I'm always afraid that, like anything else, when you've been in the market long enough, when's the rug pull, when's the floor going to drop, when's the SEC going to send that thing to zero? Like, because right now is kind of it's the future good old days in a lot of ways, because getting a 10% yield on a USDT is great now, but when all of a sudden Bitcoin, like let's say it makes new highs and goes into a long painful pullback, and there's no leverage being taken on, because USDT is really the acquisition of leverage, and so
you just said something very profound there, though. I just wanted to highlight USDT is
the market deleverages these stable coins. The yield in stable coins is going to drop a lot.
Right. You just said something very profound there about tethers, essentially. Can you repeat that just one more time, please?
Well, there's decent yields being paid on USDT, for example, and other stable coins.
With regards to the acquisition of leverage.
That's right. Because most of, and I don't know exactly what percentage, was it 75 or 80? I can't remember percent of the acquiring of crypto is against USDT.
Right.
So there's demand for USDT. So they're paying you for the USDT. They're paying you an interest for your USDT. Your stable coin is held. And so it's not unlike a bank. So if a bank has a fractional reserve system, they are taking, your capital and they're lending out based on your capital. And so we're seeing this with USDT. And then when that leverage unwinds, you're going to see USDT interest because demand is going to drop. Because it's just like the Aussie yen carry trade. The borrowing in yen. So think of it this way: when we were borrowing in yen at 1% and moving it into Aussie at 5 or 6%, and sometimes AAA bonds, higher yields. When the market starts to unwind, this is all. So you borrow in yen, and then you're leveraging the yen to go out and buy these assets. When the market unwinds, and no matter what assets you own, if you're a fund manager and you have diversification of assets, as that unwinds, you've got to repatriate you've got to withdraw from your positions, repatriate your loans, pay them back. So when you pay them back, the yen rallies. So in this case, as you pay it back, the yields are going to drop. And so when we saw the deleveraging, 2009, you saw the deleveraging and the yields dropped down to zero, right?
Right.
So we're likely to see a similar pattern when this market becomes more rich, more voluminous, because as time goes on, I mean, this is a beast, really.
Yeah.
So
absolutely.
So as time goes on, the market's going to become a lot more liquid.
Right. But probably more liquid, but also less volatile, I imagine, as well.
Yes, that's right.
Right. So I think we're kind of coming to the end of the hour here. I want to be respectful of your time. But I can't let you go without asking one more question, man. And I know after talking about all of this high consciousness stuff at the beginning of this of this video with psychology and everything, I have to ask, what are your thoughts on Bitcoin right now? Where do you kind of see this one going? Let's say like around end of year, and just kind of where you think this asset's at right now as far as price action goes.
I'm based on the way that I'm seeing price on Bitcoin. If you're like an accumulator on dips, right around now is a good place to start. But I would say we can see some lower levels.
Right.
I think we definitely can see lower levels. Again, as an accumulator, I'm buying Bitcoin as well as some quant, and I'd like to see Luna pull back a little more. But
Luna.
Nice. But I like. I don't think we're not. I would say that no, we're not at the bottom yet of this retracement. But I think it's a good place to pick some up, because I think in the new year we'll make a run at the highs, and then after the new highs, we probably go into a long, painful drawdown. And again, a lot of it's like, and I love how you cover leverage, because I think that's the one tool you really want to watch closely, is that leverage is really going to lead the swings. And
it drives everything.
Love that tool. Yeah.
Well, it goes hand in hand with a lot of the concepts that you speak about. This whole game, especially Bitcoin, is a game of liquidity. We have all these big funds and everything in here now, and they can't just market buy or market sell a shit ton of Bitcoin. They can't do that in hundreds of millions or even tens of millions, I imagine, without destroying markets. So you got to engineer it for yourself, and the best way to do it is liquidate some over leveraged people, typically. So
you just, it has to be done. So and this is something that, and I think your tool is finite enough, and call it short term enough. It picks up the leverage, and you're like, and because you can see it in the price behavior.
Right.
You can see the leverage in the price behavior by if it slowly builds up and then goes boom, sharp drop. that's a quick
clearance them out.
So and I mean, I'm talking even on the smaller time frames, because we've been seeing it in the S&P and the NASDAQ climb all the way up. When you measure the percentage and the design of how price moved higher to how it pulls back, very, very fast, because the higher it goes, the less liquid it gets. Bam, creates volume. Same pattern repeats itself. So
that's why we love it, though.
I think right now is it's a good time to start. But I'm accounting for, potentially another 5-10% lower.
Yeah, I don't think it'd be asking for too much to go back down somewhere around 40. Yeah. That's certainly possible. Yeah. Chris, this has been so amazing, man. I want to thank you on behalf of everyone in the community, because like I said, you have so many fans here, myself included. Please let people know where they can find you, your socials, all that good stuff. How can they get in contact with you?
So I'm at protradersclub.com, and I will say I'm not very socially interactive. I've got a Twitter, but I'm not on there much. I don't have YouTube. I've got some free videos at protradersclub.com. I need to maybe update one. Let's call those videos, maybe are getting into vintage category now. I do have a membership that I'm very active with, about 3 times a week. We do live sessions from time to time. And people seem to be quite pleased with the content. So that's where you can find me. I love hanging out with traders. What can I say? I just thank you so much. And it's always a pleasure, and hope to see you guys again soon.
Amazing. Amazing. I'll definitely link that in the description below. So thank you again, Chris. And until next time.
You got it.